this week, and I literally thought that we were going to have a whole lot to talk about this week. I really thought like it's the summer, it's kind of things are going to slow down. There's not going to be as much not as many headlines, not as much data, and things. People are going to be on vacation, but shit, that doesn't seem to be the case, Patrick.
No, it's not. It's so interesting because we've been talking about a lot of these things for a couple of years. That's the problem. I don't want to say it's a problem, but we're always looking into the future, having discussions about what's coming. And then, 2 years later, it shows up. But that's the nature of what we do. We have to look into the future that far. So a lot of this data is not surprising. I would rather be wrong than right. But at the end of the day, it is starting to unfold like we said it would unfold. And now even mainstream media's, guess what? Mainstream media's finally kicked into guess what? The condo market's coming down. Oh, really? Surprise.
They talked about that on, I saw it on, like I was walking by, I think like I was walking by like I forget, not a Starbucks, but I was in the mall or something. And I saw this with the kids and I saw this TV and it like, big headline, historic condo crash. And I'm like, where have you guys been? We've been talking about this for 15 months. I mean,
totally. So that's what's going on, and sadly, there's not a lot of good news economically. This weekend, we were talking to a room full of investors who are excited about what's going on because they see it the way we see it, which is in these kind of down markets, in these slump cycles, as we go into them and go through them, lots of opportunities are showing up. Now, lots of caution has to be used, and especially when it comes to financing. But now what's happening is that even CMHC is going, okay, we got to slow this train down. We got too much money at risk. They're finally picking up on it. So I want to unpack that for sure in this conversation, because I think it's one that everybody needs to be aware of so that they don't get caught unprepared for what's coming in many areas, and that is in the multifamily space.
Well, why don't we start there, Patrick? Because it's a great topic of conversation. But also, before we get into that, I don't know. You and I are both big fans of like the Rein It In, the All In podcast, I should say, right? You guys were big fans, you and I, and other friends of ours. And we got mentioned on the All In podcast this week. Did you know Rein It In was mentioned? And I'll see if the producers go get this clip. But it was David Freeberg who was talking about reining it in, and now he was actually talking about the U.S. deficit, but he said the word "rein it in," and I thought there's a plug for us. I mean, he's on our show.
Freeberg wouldn't be talking about real estate, that's for darn sure.
Yeah, no, he was clearly talking about reining in. Like he said, we have to rein it in. And he was talking about the U.S. deficit, but I thought, hey, I'll take a plug any way we can get it, Patrick.
So back to the rein it in plug. I mean, at the end of the day, CMHC is finally starting to rein it in. Let's talk about what we've seen coming and we've talked about. But when we look at all the developers that can no longer pencil in, make it work, make the math work when it comes to building condos, they've shut down, but they still need to pay bills. They don't want to lay off staff. So what they're doing and what they've done is entered the multifamily space, the purpose-built rental space. And so there are many of those developers going all in that space. Well, here's the thing is that CMHC is seeing the risk profile or the risk amount of mortgages that they've got, really escalate. They up their fees. They've changed the dance step, trying to slow things down a little bit. But the developers are really going hard into that space. There's the guys like you, with Invest Your Property, you guys are developing small multifamily, that's 6, 8, 12 unit kind of stuff, but they're going in way bigger in much larger projects. So we're seeing a lot of inventory right across the country. I happen to be in Edmonton. Edmonton is definitely, I don't want to say definitely, never say definitely. In my opinion, what I'm seeing in the Edmonton market, the Calgary market's already seen it, is we're going to get it into an overbuild situation in that multifamily space. We talked about this, JG. And here's the thing that investors need to know. Number one, rents will start to be far more competitive. You are going to see a lot more brand new units come online. So some of the concern there is if you've got an older, let's say a 12 unit building, and you're going to be competing against a brand new 8, 12, 20 unit building, the preference is going to probably be for tenants to want to move to the newer building. Having said that, if you are in that space where you've just done a development, bought a new units, a new multi, uh, rents are getting softer. Like they really have capped, they're not going up. And so if you started building a year ago or a year and a half ago and you're just coming online now, your pro forma was based on $1,500 a month or $2,000 a month rents, whatever the number is, doesn't matter. The point is there's a good chance that they're going to come down $100 or $200, not up. So these are things that we're starting to see unfold as more units come online. And by the way, JG, just to kind of play that whole scenario out, what we see in terms of units coming online actually pales in comparison to what's coming online. So these are some real concerns in terms of overbuilt, and we as investors need to pay attention, especially regionally.
Yeah, there's a couple different elements I think we should talk about. One of them is, it was 2 years ago. We were in a serious crunch. We were bringing in population like crazy. There wasn't enough rentals. Everything was renting. You remember, Patrick, we were telling investors, like, be careful. Don't go buy a crappy property here. Just because you can rent it today doesn't mean you're going to be able to sustain that rent forever. And here we are. I'm going through this situation with a property that we manage. It's not one that I own, but it was one that we manage. And as I was just telling my team this morning, they're having a hard time renting this one particular unit. And I said, tell me a little bit about the unit. We did some renovations to it, but the carpet still needs to go. It hasn't been fully, it doesn't have all new floors. It doesn't have air conditioner, right? Air conditioning. The parking is a little bit precarious. So like there's 2 or 3 little nigglies on it that are not perfect. And you know what? Tenants are saying, listen, I can be competitive. There's a great property just over there for the same price or just a little bit more. I'm going to go there. 2 years ago, people didn't have a choice. They were renting anything they can get their hands on. That's not the case anymore, Patrick. And you're absolutely right. And I think this chart, interestingly enough, I find it curious about this chart, Patrick, is as you see the rental orange line continue to go straight up, and then you see that condo line come straight down. It's interesting how those two things kind of happen at that exact cross intersection. And another part of this, Patrick, and I'll end on this, is the condos. Some of these condos are not selling. Guess where they're going? Into the rental pool. That is adding supply to the rental market in a big, big way.
Oh, huge. And specifically, when you look at the bigger centers, we'll use a Toronto, for example, or Calgary, even Hamilton. That condo melt up is now a condo meltdown. And it's been going on and on and on. And it's going to continue we'll now start to see even more headlines, because here's the fundamental about it. And, I was thinking about it over the course of the weekend as we talked through, and I continue to do the research. We have to consider this. Now, we've talked about this many times, that part of the challenge that Canada's always had is the lack of productivity. Now, within the course of the lack of productivity, we didn't really see it. The general population, it seems even our government didn't frickin' see it, or the Bank of Canada. The point was this: we were driven by consumerism driven by immigration. As people come in, they set up house, they buy all this stuff. Interest rates were low at the time. Everybody's pulling the future into the present, buying stuff, doing all those things. We all were aware of all of that. But then ultimately, we had a lot of our economy being driven by real estate and by real estate investors. Well, okay, so all of that is coming to, and I want to say it came to a sudden screech. It's now the lag time is catching up. So it's like, the train, the engine hit the brakes. The last car is finally kind of all the slack's being picked up and it's coming together, right? It's got boom. So we're going to see what happens there. But the point is this. So think about this. We have been a little bit, I think we could have talked more about the jobs, because we kind of skimmed over it. And we talked about the construction jobs and and the tradespeople that are going to be coming online. They're not going to have work, although they're working right now, some of them building the purpose-built rentals. So we think that slack has been picked up. But having said all of that, we're going to start to see a lot more of the layoffs happening. So consider construction of a bunch of towers, a bunch of condo units, so those construction workers are gone, but we can't step over the ripple effect of all the individuals. I'm talking about lawyer paralegals, just as an example. I'm talking about realtor teams. I'm talking about the fencing that goes around a job site. I'm talking about the porta potties that go to a job site.
There's equipment rental companies in general, Patrick, as another example.
Yeah, exactly. So the list of people that are affected by this and businesses that are affected by this goes far beyond just construction jobs. And, it's the restaurants, it's the, stores nearby, it's all of the things that, construction workers do, stopping to buy a coffee at their favorite Tim Hortons on their way to the job site, et cetera, et cetera. The point is that we're going to start hearing a lot more. And although, we're talking about, you're going to see some numbers coming out, and these numbers are always freaking wrong, drives me crazy. And they're saying, well, no, there's, actually the jobs uptick. Well, where did they tick up? Well, they ticked up in Alberta, most of them pretty solid. Now Carney's talking finally about getting rid of some of the bureaucracy in the government. And that's not good for those workers. And I have, certainly got nothing against those workers. And so when I say it's about time, it's not without some compassion and even empathy for those that are going to get laid off. But the reality of it is we need to cut back the bloat of the government, because much of our GDP was driven by government and the jobs and the hiring. And that's not real GDP. It's not productive. This is all catching up to us. And sadly, things are just going to get worse before they get better.
Patrick, you said you're in Alberta right now, right? Like as you shoot this, you're in Alberta. I'm actually concerned for your safety, because this is two episodes in a row that you positively comment on Carney, and you can do that in BC. That shit'll fly. But you're in Alberta right now. I'm a little concerned about someone coming up to your hotel and taking you outside. You know how it is.
Well, listen. He hasn't followed through. It's just what he's saying, and. It's not that politicians lie. Maybe sometimes they stretch the truth. No, politicians lie. I don't know that he's going to do it or not. I'm watching what Carney's doing. I'm giving him some rope. I think he's going to end up hanging himself, but I'll be optimistic.
Listen, dude, I'm just impressed that you're willing to give some rope. This is great. I love it. This is fantastic.
Listen.
I'm not a Carney fan. I wish Polyev would have got in. That was my vote. But the fact that you're willing to go there, Patrick, that just shows your savviness. It just shows
my maturity. It's my maturity. Like, I'm being wise. I'm just, listen, I'm trying to be agnostic. And to be, quite frank, I don't care what politicians in place right now, the past 10 years, that federal government has made such a mess of Canada. I don't care who you put in there. They're not going to wave their hand. It's going to be painful to get things straightened out and get things handled. And we're talking what's going on in a global macro. It's not just Canada. We're at the effect of a whole bunch of other things that are going on in the world. But ultimately, I'm going to give and be optimistic, because I want Carney to win. To be honest with you, I really do want him to.
You want us to win. If he wins,
I want us to win. Yes.
Of course.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.